One of the things I never thought like I should really say is that if your product is bad, nothing is going to fix it. No one really thought that when you attract all these bots and all these extractive users, basically you're killing yourself. Because what happens afterwards is that the moment you're distributing your rewards, the first problem is that you've lost so much money, so much capital on something that is completely wasted. Like bots, they don't care about you. They don't like build a relationship with you. They're going to leave the moment you give them what they want.
I don't think we're live on Twitter yet, gentlemen. So who am I saying hello to right now?
Me.
Hi, Josh. How you doing, buddy?
Let's see. Hello. Good morning.
It's literally the only endpoint people can stream on, isn't it? So what am I even doing here?
Do we need to hop off and reset it?
No, we're live. We're live.
We're live?
Yeah, we're good. We're good. I see it.
This is just a front end thing that's going on a thing? Yeah, we're on. All right. Hey.
We're live.
Thank you. You know what? This is great because I was like, all right, I have a canned intro. We're going to use a canned intro. We're going to step this up. It's going to be tighter. It's going to be more direct. It's going to be easily clippable. And then that's how we start our first day trying to go do it. So feels good. Welcome back to Internet Explorers, a weekly show where we dive into what the fuck is actually happening in the consumer crypto space and beyond. I have a fun show for y'all today, but before we jump into some of the esoteric topics that Josh and I have curated today and a bit of our guest, how are you doing, gentlemen?
Great. I'm great. Rocky week in the markets, but I think I think as long-term investors making early bets on things that are going to take years to unravel, I think just continue to have great conversations. I think 6 months ago there was a ton of noise, a lot of narrative chasers, and I think we're seeing the real founders emerge again. So bullish amidst all the chaos.
I love it. I thought we might be like one of the only live shows this week that would get through an hour without talking about tariffs because they weren't on the list, but failed that one already. Josh, makes sense. How we doing, Peace?
Get it out of the way.
Yeah.
Doing quite good. Cruising right along. We're vibe coding through the. I mean, thank God, actually, that we have on this downturn. It's great. So everyone's.
That we have what? Vibe coding on this downturn?
Yeah, exactly. It makes it so much faster because we just got more websites, more things. It's feeling good.
I love that you're saying that without meaning it sarcastically, and yet there's no way for me to not take it sarcastically.
I know. No, it is sheer and utter sincerity. It's great.
Yeah. Awesome.
We can twiddle our thumbs productively, finally.
It's true. Imagine what vibe coding plus the pandemic would have done. Probably would have drank way less.
True.
Would have been a different world. Well, we've got a great show for you today. Excited to have Joseph join us today at the bottom of the hour. Joseph is an academic and researcher. Has spent the last year diving into the world of points and quests as they relate to L1s and blockchains. And his research is probably not surprising to most of us, but definitely provided some sober receipts, if you will, for the ineptitude in which we are applying these things broadly across crypto. Maybe not ineptitude, maybe it's actually on purpose because all we care about is vanity metrics. But Joseph brings the receipts, and we'll get into that. But I'm most interested in diving into what do we go do about it? This big question of how do we actually, incentivize, reward, and align users still seems to be a big challenge in crypto. One that we're all hopefully making progress towards, and excited to sort of dive into that. Very, very sharp dude. That'll be at the bottom of the hour. And then we just have a whole host of amazing topics. We have Appcoins, AI meeting SEO and OnlyFans, why tokens won't save you. It was a great post by Smokey Barra. And we're, of course, going to dive into this world of agentic investors. And we got some other fun stuff too. So nice, a big list for y'all today. Shall we jump into it?
Let's do it. I think Peace just said someone's at his door, so the screen may be slightly delayed, but we can get into it. Yeah, I think we're gonna try to just rip through some topics today instead of lingering like we usually do. So let's see how this goes.
Yeah, shots fired at me for rambling all the time. We'll try. So yeah, I wanted to start with Ohara Appcoin. So we had Brexit on the show
maybe a month ago to talk about his company Ohara, which is basically a vibe coding social platform. And this week they announced Appcoins, where any creator can now launch a token alongside their app. So they're really building for this world where software becomes content, vibe coding becomes the new posting, and to really kind of laser focus on solving distribution and monetization for creators. He said in this thread actually that like their one job is to enable app creators to go viral and make money, and obviously allowing people to tokenize the things that they create and release are well poised to help both. So the way it works is 10% of the tokens go to the app creator and they vest over 12 months. All trading fees go to the Appcoin treasury, which has some governance rights. And then 3% of tokens of any remixes. So you can basically find a product that someone has built and just remix it pretty simply. And 3% of the tokens of any remixes of the app go to the treasury of the original app. It's cool. It's one of the first things built on Doppler, which we're excited by. So it uses all their complicated Dutch auction and dynamic bonding curve, price discovery mechanism stuff under the hood, which you don't really need to care about. But yeah, I think generally I love it. I think, everyone's ready for kind of a new meta or a new thing in crypto to get excited by. And I think, software as content, vibe coding, and figuring out how tokens can kind of interplay in that world is, I think, a new thing to get excited by. I think the one thing that's like clearly not right to me as I look at this is the creator having to monetize from selling vested tokens, and the year-long vesting just kind of feels like a mismatch for the product. I would much rather see creators earning from swap fees as the tokens of product. Swapping is how people actually consume that product, and I think creators should capture value directly from that. And also, I think if they're leaning into this software as content, that's like a very ephemeral world, and a 12-month vesting period for something that has the intention to be this like viral ephemeral product just feels wrong. But I mean, fuck yeah, I'm just pumped about seeing how this plays out.
Yeah, I mean, I think the place that we need to innovate here is on the sort of market creation mechanisms, and I share your curiosity around how to go do that better. I mean, I think the way we get there is by building, etc. But this doesn't feel quite right to me as well. And I think a lot of what I've been thinking about recently is really like the magic of consumer crypto apps specifically is this idea that you're kind of pushing a lot of your costs out into this either public infrastructure or to your user. And so the ability to go build is a lot cheaper. And of course we had vibe coding on top of it. But I would be much more interested in these things if they're actually making money and there's like a revenue share that's going through or something like that. And so I feel like, that's maybe the missing piece. We're still anchoring in on the memetics here. And then there's a tension there. Like if you're going to actually try to go make money with this sort of stuff, a different token model probably makes sense versus, one that's more memetically focused. And so, but yeah, let a million experiments thrive here. That's probably the thing I'm most excited about in crypto right now is seeing people actually truly question, like, what is the best way to initiate markets here? Because clearly the way we're doing it is not long-term sustainable.
Totally. And I think, they recognize how early this is. They actually have a really good, I think it's public group chat of like the community around the product where they're just very actively engaging with people and trying to figure out the right way to do stuff. It's actually just a good source of like AI news too, because they have their finger on the pulse. So yeah, excited to see what they continue doing. Nice. Let's jump to AI SEO. This just kind of continues being a topic that fascinates me. Just what, in this world where more and more people are kind of searching the internet or interacting with the internet through these LLMs, like how you get distribution in this world or stay relevant as as a website or people who need as a place that needs to attract traffic. So Zeno shared a thread mentioning how many of their customers are coming from LLM recommendations. It's actually pretty funny clicking through these and just seeing like, oh, Claude brought me here, Claude brought me here, Claude brought me here. And he talks a bit about just the behind the scenes of how they're actually leaning into that as a distribution channel. So the strategy that he outlined is basically, great traditional SEO of course, using LLMs.text, which is this new format to help LLMs process content. And they also are using a product called Profound that I want to look deeper at, but basically it's like purpose built to help companies manage and improve their AI visibility. So it's like what Ahrefs was for kind of SEO, it's that for kind of AI visibility, which sounds really cool. So I think those are kind of like the tactical things you can do to show up in LLM search results. But then there's also this game of making sure you're included in LLM training data, which is ultimately where the actual affinity of these LLMs for your product really comes from. And I think we talked about it from a Good Alexander post a couple months ago, where just because of how much like, you know, Bitcoin and Chainlink and XRP were talked about and mentioned in these early internet forums, like there's a clear affinity from these LLMs for those tokens. So there's also this kind of interesting game of like, how do you just get a ton of kind of raw social content about your product that the LLMs will be, you know, ultimately trained on, and, you know, they'll have some natural affinity for, and, you know, they'll recommend, you know, those products or tokens or whatever to the people talking to them. So yeah, just bubbling up, because I think that the entire game is just changing across the board, right? And the playbooks everyone's been running for decades are no longer going to work, and the future's just going to be won by people that are living in this AI ubiquitous world.
Well, I mean, it feels like, you know, it's that book and post from, I think, the Wired co-founder about the long tail back in the early 2000s. It seems like it's just becoming more extreme, right? Like you're going to have fewer massive winners, and then a much longer tail. And what is crazy is so much of this is embedded just in, you know, what are the artifacts on the internet today, and, you know, the incumbents are going to have such a benefit from that, which I think is, you know, again, one of the big open questions around AI is like, is this an enabling technology or an extending technology? And continues to look more extending, though the long tail is a place that I'm very happy to go play, and I think very excited about, and probably the most important place to really create value for a much wider group of human beings, and very much where I think crypto plays in the intersection.
I just have to share. I think this AI SEO concept is really interesting. I was blown away by the Times Square New Year's Eve ball Planet Fitness sponsorship that is this piece of paper taped to the podium. And I was like, I'm just baffled that this was the thing that they did. And so I sent it to this chat with a bunch of designers. And the first response that I got was talking about AI legibility. And their theory was that there's no way to make it more clear that it's not integrated into the design or something. I don't know if that's really true or not, but I thought it was a funny response, and it was I really like this concept.
Designer cope.
Yeah, designer cope, maybe, totally.
That's wild.
I'm upset.
I mean, it's so it's on brand for Planet Fitness. So.
Yeah, right. Hard. This might be a Mark Zuckerberg barbecue sauce moment or something.
Yeah, it's 3D chess in the marketing world.
I mean, it's gonna be funny just to see how like AI starts impacting things in the real world like this. Like, you know, the medium's the message, right? And if everyone's interacting through LLMs, and I don't know, it's probably going to be weird. Third order.
Seems like a stretch of this piece of paper is directly related to LLMs.
I agree.
But I'm proven wrong. So yeah,
I agree. All right, let's jump to a token won't save you. So Smokey, founder of Berachain, dropped a good post here in response to, I think, a bunch of recent token launches that have happened within the Berachain eco. And he just, you know, reading the post, he very clearly feels like teams are just YOLOing a token out with very little critical thinking around, you know, whether they're ready for it. And, you know, since they're launching an altcoin on an alt ecosystem, while things like Solana are struggling to catch a bid, they're just kind of continuously getting smoked. And I also think the Bera eco is probably way smaller than most people in the Bera community realize or feel. You know, when you're in this insular community, I think you can pretty easily feel like you're, you know, owning attention or kind of on top of the world. But, you know, I think when you really look around it, often these ecos are actually way smaller than you really think they are. So I think he's also just clearly very, very sensitive to the impact that unsuccessful token launches within the Berachain eco will have on developers' desire to go build there. So really just kind of put out a rallying cry for people to, I mean, really like not launch tokens before they're ready. But I think the TLDR he wrote here was pretty good piece if you want to scroll down to it. Yeah, it was up there, the 5 bullets. So like, you know, if you have a product that's generating revenue, double down on that, make more money, find ways to increase distribution, ensure that your default alive and ideally meaningfully profitable. Set yourself up for buybacks as a possibility. A token can hurt a project. People see a tokenless project may engage by default if the product is good. People who see a product where a token that goes down will form an initial impression that can turn them off irrationally. I had this experience with Berachain as a whole personally. You know, very little price discovery in the middle ranges. It's either, people are risk off or buying, you know, 100K market cap. Obviously, liquidity is the wrong reason to launch a token. And then lastly, he talks about just kind of coordinating within the eco for if you're going to launch a token, because there's limited attention, limited liquidity, and competing for the small amount that exists is not great.
I think there's another thing going on here too. I mean, obviously they went through the craziness of launching a token, and so I think there's like the emotional feeling of that. But there's also like the main thing I see coming out of bear chain right now are just yields, right? And so there's like other financial gains there that are actually a lot more compelling right now. And I think there's been some critique of L1s along those lines, where basically like if you are making it so valuable just to hold the sort of native token because the yields are so high, it really creates a disincentive for others to go and maybe speculate or participate in the wider part of the ecosystem. So I'm not sure if that holds to be true long term, but I also think so much of this is like, advice that it makes a lot of sense in the markets that we're in today. And I think continue to think one of the biggest challenges we have as founders in the space is recognizing when the epoch has changed. And that's both around regulation, and I think right now is sort of around sentiment and demand. And obviously we're in the midst of a massive set of volatility and uncertainty. And so launching a token today, I mean, I think there's other news probably of public market companies not wanting to IPO, etc. This makes sense.
Yeah, totally. All right, Peace, let's jump to Circle IPO, and maybe I'll do this as my last one, then we'll throw it to Jess so we can get some of his surface because we're running late. So Circle, I mean, they filed for an IPO this week. I think news just came out minutes before the show started that I think they're withdrawing their application because of market conditions, but
pausing.
Sorry. It was interesting seeing people kind of analyze their S1, and really not looking great from what I was seeing. So actually, Peace, you want to click into that the Omar tweet there? Yeah. So he dove into it and kind of pulled out that the gross margins are getting crushed with distribution costs. Core U.S. markets being deregulated, and banks and financial institutions are ready to crash the private party. So they're all looking at launching their own stable coins, spending a lot of money. Their core income driver, which is rates, is already topped and heading lower. And really just 32x earnings for a business that just lost its mini monopoly and facing several headwinds is expensive when growth is structurally challenged. And then I think the quote tweet piece, if you go back, scroll up. So I think this actually makes a lot of sense to me too. So Sam, who's the founder of Frax, said, what if it turns out that stable coins alone are actually incomplete, unprofitable without tightly coupled chain eco sexes, and Tether was the one-time single exception to that rule. So you kind of need, like, they're commodities, right? Like, you actually, distribution is still the entire game here, especially as it gets easier and easier to launch, less regulatory kind of monopolies here. So yeah, interesting.
Yeah, it's liquidity and distribution. And so that's why I think when people are kind of, pulling out the amount that they're giving to Coinbase, I think it sort of misses a lot, and that they should be willing to spend up to their last dollar to go get the right distribution and kind of become like a default deep liquid stablecoin. And I think, the world where there's like a million different stablecoins, I don't know if that, like, the winner still wins bigger. And so I think that's strong for USDT, and I think I agree with the take there. And I think, like, who's going to be able to compete with spending $60 million to get a listing on Binance, or whatever the ongoing multi-million dollar, tens of millions of dollars that's paying to Coinbase. So I think it's maybe a little overcritical of that, but also I think we are sort of in a mini hype cycle around stable coins, and I think people are a little bit illogical around how those things ultimately play out.
Yeah. I mean, you could also see just the killer apps wanting to launch their own too, in the financial space. Like, Robinhood launching their own stablecoin probably makes a lot of sense at some point. Distribution, liquidities.
Okay. Yeah, that's like the counterpoint is really like, how much affinity do you have to USDC versus USD XYZ or whatever? And I think it's more affinity than you might think. Like, I'm not sure.
I trust it.
Well, and I think that's the game, really, right? And so, like, are you going to hold? I mean, I don't want to hold my crypto on Robinhood. I'm going to hold my stable coins on Robinhood. No, but obviously PayPal is a counter here. Like, they have done, been an early mover in that space, and so I think that's very likely to happen. So, interesting.
But if it just becomes like, Robinhood's like default trading pair or whatever, sure, and cash is held in that, like, they could force their way in there pretty easily.
Yeah, interesting. We'll see. I mean, I was eager to see where it started to trade at, so I guess we're gonna have to wait a little bit longer for that. Yep. Cool. All right, let's jump into a bunch of news coming out of the open social world today. LensChain has launched. I think they've been sort of deep in refactoring, rebuilding, and have come out with, I think a very complete platform for folks to go and build socialify, as they're calling it. God, I hate that term, but I think probably makes a lot of sense. Can you just bring up the LensChain here? I think this is a late ad piece as they just launched today. Seems like it has a whole bunch of just click on LensChain. Whole bunch of interesting things out of the box, using some, it's sort of a chain built on with ZK. Has a whole bunch of ability to gate and limit and use tokens, etc. Built-in storage, etc. So it'll be interesting to see where this lines up. I think we've seen a bunch of activity from the Farcaster ecosystem in the last little while. Seems like it's catching a bit, as they say, and I think a lot of that has been around them leaning into mini apps and some of this sort of token distribution stuff. Yeah, I mean, my take on all this sort of stuff is this is the next level of incredibly important infrastructure for sort of open financial world that I think we want to build in. Twitter, X is cooked. TikTok, will it exist? Will it not exist? Regardless, they're all algorithms controlled by somebody else, and I think being able to own your social graph just becomes an absolutely essential piece. So excited to see what gets built on LensChain. We've also seen a bunch of activity from the Farcaster ecosystem over the last couple of weeks. Airdrops, tipping, rewards, etc., along with some they're renaming to mini apps, and then ultimately into the sort of new mini apps, I guess, the way of sort of minimizing stuff. So it seems like they've sort of found a niche that is at least working for their audience right now. I continue to get $3 sent to me in some ways, which strangely has a very positive impact anyways, even though it's rather inconsequential. But I also have some pretty big open questions around it. I think a bunch of the early airdrops were really low value, or at least not properly aligned to me and my interests. And I think, if sort of access to the social graph and thus notifications and sort of showing up and being discovered is the core value here, really, when you get down to it, burning out my attention because of sending me very low value things, which is still actually the majority of things that I'm getting right now on Farcaster, I think is a big concern. So very solvable problem. It's probably data and a better algorithm. And I think it makes a ton of sense to really treat these as financial networks at the core. That is the core differentiation compared to, Facebook or Twitter, et cetera, for now, at least. And so I think it's the right direction, but yeah, I'm not looking forward to airdrops coming from Farcaster right now, and that's only after 3 of them probably being sent. And so
Yeah,
I think
it's still free.
Will be very sensitive.
It's free money, so you're fine with it, but it's not working as a marketing strategy.
Yeah, because I think there's actually a really interesting marketing strategy there. I think they've tried to sort of fine tune it a little bit, so there being some action with the account or with a mini app, etc. So you can start to see how this is going to be, airdrops or token distributions as marketing. I think the core of that is really interesting. I just think that the burnout on notifications is the thing to really fight against here. And now maybe that's the advice they've taken, because I haven't seen any come through in the last week or something like that. So. But again, super bullish on. I just think we can do a lot more. I think we will do a lot more in building on these platforms, just because of how important it is for this future that we're building towards. So I hope we continue to see amazing progress in that way.
Yeah, I tweeted this week actually that I think the simplest bull case for Farcaster and probably Lens as well is just building these app native feeds that have embedded wallets and open social graphs and are permissionless and uncensorable, because especially I think we're moving into this software as content world, this vibe coding world. So the number of software getting created is going to explode. Being able to just tap into the existing context and assets that people have and the distribution of these social networks is going to be so core. So
yeah, we've gone from text based to image based to video based to app based software, and I think it's going to be. I mean, my bet is within the next few years, you're going to see Twitter and TikTok and maybe even Facebook start to roll out, their content distribution machines, software's content. I think we'll likely see that as well. So yeah, bullish open social. Okay, let's move to agentic investors. I think we had Prion, was that last week? A couple weeks ago, last week, talking about Aiden. And since then, talked to a few teams that are building similar things like this. Dave Front from H1. I keep forgetting what it's called.
H0.
H0, right? So basically built, and just I share this here is just like another example
HF0.
of HF0 of I think this opportunity people see, which is like raising from venture sucks. There's sort of some coming from the DAO space, which is like, well, how do we actually be more efficient or effective as a group in making investments? But it feels very much like a novelty right now, which is I think why I believe these things are really going to follow the same arc as the AI agent meta over the last little while. It's going to be a couple early movers are going to capture a whole bunch of attention and novelty, and it's probably going to be much more performance art than reality. And then we're going to see this fast follower group because the barriers to doing this well enough are actually incredibly low. Doing it really well, I think, is going to be incredibly hard. And so we're just going to see a whole bunch of flooding the zone of a bunch of these different things, and I think the commoditization of them in some way. And then we're going to get tired of them for a little while, and then we're going to see some real utility emerge from this. And I think the founder tools and sort of this breaking down the barriers between funds, et cetera, especially if you're large and maybe dealing with a lot of deal flow, or maybe building tools that actually help founders show up better, be more effective, et cetera, I think is really interesting. So I think there's going to be like a big utility push here. And if you think about the back office for VC funds, et cetera, there's clearly going to be a ton of opportunity there. I think a lot about Alexis Ohanian's sort of tech firm that is built that monetizes using VC. It just feels like this is the way that really makes that really real. So yeah, I think it's a lot of clear value there, but I think it's going to be commoditized, and I'm really curious where this ultimately lands. But I think we're going to have a bunch of fun content, and even just talking to some of these guys and some of like the activations they have planned, or going to capture a bunch of attention. I think can sort of step out of sort of the limited worlds of where AI or crypto is today, and maybe start to attract other people's attention. So
I think it's going to
fun
be
novelty.
Like commoditized kind of table stakes thing. There's going to be no edge there, I don't think, long term, but there's this like novelty arbitrage opportunity right now to just like come out and do a weird thing and capture attention and kind of grow your brand through that.
Yeah, and there's just like a lot of inefficiencies in all of this. Nobody likes going through that process, and so I think there is like meaningful improvements to be making through there. I just think that there's just the differentiation between them is going to be very hard to find. It's going to come right down to brand ultimately, and that's going to benefit incumbents, and it's going to benefit some early movers or those that are most effective with it. All right, I love this next topic. It's all Base's fault. Scroll up, because I think that the initial tweet is the most important here piece. So it's infected.fun team came up with a tweet saying, "We crashed Base and now we're moving to Solana." Based on the replies, both from the Base team and some of the other users, apparently wasn't that Base failed. It was that they hard-coded gas into their front end and kind of forked it up. I don't know what's real, but all I know is that showing up like that on the internet, and then all the Solana bros that are jumping into it, just make them look like petulant children, and it is embarrassing. And if we could just flash up, "I love you, but you're not serious people" here on the screen, I think, which we don't have peace, I know, but it's just my whole take. It's just like, what are we talking about here? This is, to me, the most important thing that we could be doing as an industry right now is building an aspirational vision that we're moving towards, and watching, these sort of emotionally intelligent, stunted human beings show up on the timeline, most of whom are bots, let me tell you, because I think we see that a lot. But there's some real people in there, and other projects and other investors who are very well aligned start to play this. Yeah, okay. So here's as a validator node on Base, I can attest.
This is a great troll.
I can attest that you certainly did crash, and then the teams like this, and oh well, actually there are no validators on Base, that are public validator nodes on Base, which is maybe a very fair concern for Base. But so it's just it's embarrassing. Please stop. Please stop. You're not showing up good. Congratulations, your 14 friends on Twitter think that you are based or not based or whatever it is, but the rest of us are looking at you and just being like, you're just not serious people. Not serious people. So yeah, I think.
Yeah, it's funny because I was like, in their chat early, and it was a cool experiment. Like I was excited to try it, and after it failed on day one, like they reached out and like apologized. They're like, we fucked up, and then so it's weird to now see this.
Yeah, you just burned.
Come out. Like I don't know what the intention.
Yeah, I think I'm continuing. I think this distinction between attention and affection is a really important one right now, and I think so many of us this is an example of playing that attention game. We're going to go move chains, get a whole bunch of attention, maybe regenerate interest in our thing, but affection of a group of true believers, users, etc., is the thing that you want to grow and scale. And this absolutely destroys that trust. And so I don't know. To me, it's just like unfortunate that this is the stuff people are playing around in, and maybe we should.
I
Just
mean, also
focus
that
on
like the sign of great founders is owning your failures, even if it's someone else's fault. It's like figuring out what to do to overcome them, not just placing blame on everybody else.
Agreed. Maybe just one last piece here. I thought this tweet from Nick, one confirmation, was great. I mean, it's very clearly an ETH bull, and I think Nick holds a lot of ETH, and so this is trying to make the broad point that sort of social scalability. Well, let's go back. There's a really this money, blockchains, and social scalability by Nick Szabo was probably one of the most formative posts for me in my crypto career. It kind of came out right as I entered the industry, and it's really making the argument that social scalability is the ability of an institution to maximize the number of people that have skin in the game and win. That's Nick's reframing of it, and this came out around the era when there's a lot of private blockchains, and so sort of making the argument that public blockchains do this far better than private blockchains. And I think that's really the point Nick's trying to make here, is that sort of this credibly neutral store of value that ETH has a position to be in is really like the big thing. And maybe in the short term, it's not valued as much, but over the long term, it's the thing that matters. So I think this is like a thing that's kind of been lost in a lot of the consumer crypto stuff. There's been a big focus on speculation and the dopamine hit. But most of these products weren't really about social scalability, like the ability of larger groups of people to both be incentivized and aligned and coordinate to create value. And holding up Bitcoin as like the prime example, and this comes up in a lot of our conversations when we think about token launches, right? Like, how do you the value of somebody buying into not only the belief system, but also the token is far greater than maybe an airdrop or a small little reward without that sort of substance. And so I think the trust and belief and the credible neutrality of these things is pretty important. And yet today we still see, some of the top 10 tokens are basically company coins, and the most used app or network on Ethereum is, I think called a Fed chain for, good reason. It's still controlled by a corporation. And so, some open questions around that, but I think, in the strategic landscape of where these things really need to live, I think a credible neutrality store of value is really the thing that is incredibly valuable here. And it's going to be interesting to see how these teams navigate it. I think, Solana and Tron and BNB taking much more, corporate approaches to this in many ways, and maybe jumping into the politics, et cetera, and then maybe a counter positioning for ETH. We'll see. But I think, shifting away from like, how do I just help my users make money, but like, how do we all make money together is a big one that we've kind of got distracted from over the last little while.
Yep. I think it's probably a great segue into our chat with Joseph, because point systems, incentivizing usage, attracting, mercenary farmers is the complete opposite approach to to create
and he's got the data
social scalability. So let's bring him up. Oh, we can't hear you.
Oh, my mic was muted. Hey everyone. Hey guys.
What up, Joseph? How you doing, man?
I'm doing great, man. It's a beautiful day here, and
Love it. Canadian crew. All right, so you published some research recently that was a pretty in-depth research report. My takeaway from it was like, yeah, duh, but you brought the receipts. So maybe do you want to just give us like a high-level overview of what your research was and kind of where you netted out, and then I want to jump into the details.
Yeah, of course. And yeah, I really appreciated like how you handled it. Like, yeah, we've been talking about the problems, but what is like the solutions? Like the second chapter, which is extremely important. So I've been working on this research for more than a year. Initially, it started like more into looking into like reputation systems, and then we got to points, and then everyone was saying at the time that on-chain points is dead, like it's not gonna work. Like that was kind of like the conclusion of our like space. And we were looking at like some research to see like why this is the case, and we couldn't find any conclusive research. And then so we started like investigating and doing this research. And this research was done with like kind of like a blockchain event blockchain that we cannot name. We signed an NDA. It's part of like the research paper. You could see it at the beginning. And this chain had like a lot of like emerging apps and new apps that was launching. So part of the research, we were looking at this kind of like point quest system for the blockchain itself. And at the same time, many of these teams like start building their own points. And so like we had even much more additional use cases and data to look into it. And yeah, we kept going through like a year we were collecting the data like day by day as the program was evolving, as everything was being built. We were collecting the data and trying to like answer some questions. And at a certain point, we had the ability to a little bit work with the team to kind of like create experiments or like change some stuff that give us more insights. And that's how the paper came to be.
So what are some of the most stark realizations or outcomes from this research?
The first thing that I think, like the most important thing for like many teams right now, like doing this, is that the end was horrible. Like how things ended towards the end was not good for like any of the participating teams. Actually, if you look at it from like an investment perspective, all the money that went into developing these systems, rewarding the users, I'm 100% sure if they were used like otherwise, the ecosystem would have been in a completely different place. So that's kind of like, the emotional impact of this study is that, like poor team. But the actual like one of it, if you scroll down like to if you like the points, actually the points question. So everyone, like when we started looking at points doing the research, I was asking the teams, well, why did you allocate that amount of points to this specific quest? And basically we weren't like getting any real answer. Like no one had an answer. Like someone at some point allocated like 1,000 points to a quest, and then everyone else was copying the same model. Some people changed 1,000 to 100, and we didn't actually receive any kind of like answer. And so we did this question. We were trying to see if there's like correlation between points and the quest completion. And the first surprise was actually they're not correlated at all. It's a very weak correlation. So if you increase the points towards a specific quest, you're not going to get more completion, and vice versa. And this was like something that most people, it was contrarian, because most people thought the moment you increase points, you're going to get more completion.
I think you were working on, I'm not sure if you published it yet, but a separate piece that was trying to talk about some of the specific data you had around points motivated transactions versus non-points motivated transactions. To me, that was like probably the strongest data point or graphs that you had. Can you talk a little bit about the outcomes there?
Yeah, sure. So there was a lot of like stuff that couldn't make it to the paper because like we were obliged to have it like 15 pages, and also we didn't really conclude a lot of things like in an academic way. One of them was this type of like score. I tweeted about it. It's in a thread. I called it the BS score because like behavioral shift, but also you can look at it as like shit score. And the idea here is that like those teams, they were launching their quest. This one, that's that thread. Those teams, they were launching their quest, and the chart is something like this. Like the moment you launch your quest, you can start seeing like the total number of transactions increasing, or like the cumulative transaction count is increasing. But actually, most teams stopped there, and they weren't looking at like what's beneath this growth. Like, is it real growth or not? And so, in order for you to really understand if this is working or not, what you need to do is you need to plot the total number of transactions that you have on your chain or on your project, and under it, you need to plot the total transactions generated by the quest system. And what you really want to be looking at is this kind of like area between both of them, which is like in this next chart. And this area tells you like mostly everything about if your program is working or not, because basically the question becomes like, if you stop the quest program, what's going to happen to transaction? Well, because most of these transactions are coming from the quest program, the moment you turn it off, it's going to drop. So your total transactions that you were celebrating is going to drop again. And this metric, like the area, exactly this one, the area between those charts, it's kind of like what tells you if you're creating a behavioral shift or not. And what it means, a behavioral shift, basically a behavioral shift is that you were able to attract users that came here to explore your project, or maybe also they were kind of like reward driven motivation, like they wanted to make additional rewards, and that's not bad. So that's kind of like the first behavior that they had when you acquired them. And you want to calculate if you're changing their behavior towards something where like more loyal, they care about their project. And this is translated in this area being expanding. And the reason why, because like, like 20, 30 years of like loyalty traditional programs, they prove that the moment you have loyal users, they consume more, they transact more, etc. And so that's kind of like one way to look at it.
Yeah, I think another two interesting things that were in your report. So when you said that there wasn't a strong correlation between points and quest completion, but there was a strong correlation between ease of quest completion and number of successful completions, and also I think the cost, right? And then I think the more you dug into it and really took this perspective of like, okay, let's try to figure out how many of these are bots. I think you saw kind of like overwhelming evidence that it was basically entirely bots kind of running these quest systems. So could you talk a bit about that, and maybe if you can, some solution to mitigate that, or I don't know, what are your kind of conclusions from that?
Or like, why are they doing that? Because I think that is like the honest
that's
thing
also
we
the
need to get into.
Yeah.
Why of like the team or why of the users?
Team.
Why are they fine with all the bots? Yeah.
Yeah. So I think if we start with why and then we go deeper. So I think one of the first things that is happening that I heard from a lot of teams is that those teams, a lot of times they want to get listed on exchanges. And I think maybe that's kind of like initially the root of the problem. And it's like when you want to get listed on exchange, there's like multiple ways to do it. Of course, like the easiest way, if you've raised a lot of VC money and you have some good bargaining power with these exchanges, you have some good, strong personal relationship, so it becomes easier for you to get listed. But if you're not in this bucket of like high raise, high networking, etc., then they start imposing on you certain metrics. And they would start imposing on you like certain number of active wallets, transaction, whatever metrics they're looking at. And then, like the team find themselves in a position where like, I want to get listed, but I need to meet those metrics. And usually it's impossible to get like 1 million users within, like first month of launching your crypto product. In real life, like best products, they don't get to 1 million users within, like few weeks. How many users do we have in crypto, and how can you get to 1 million users within like first few weeks, right? And so what they have to do is like they go to like, let's say, products like Galaxy and Layer 3 to acquire a lot of these users. And most of the users there are like extractive users who are just care about like airdrops, making rewards, and most of them are bots as well. And so they attract those type of like users, and they chase these vanity metrics, and that's why initially they're doing it. And their main reasoning is that, okay, like once I acquire them, once I prove those metrics, then I could change it. Like I could go after real users. I can find ways to, like evolve to succeed. But no one really thought that when you attract all these bots and all these extractive users, basically you're killing yourself. Because what happens afterwards is that the moment you're distributing your rewards, the first problem is that you've lost so much money, so much capital on something that is completely wasted. Like bots, they don't care about you. They don't like build a relationship with you. They're gonna leave the moment you give them what they want, right? Second, your chart and all metrics start like going extremely down. Now you have to look at like a developer from outside, and they're thinking, should I build on this ecosystem or not? And they see all these charts going down. For them, it's a dying ecosystem. Why the hell I'm gonna put my future there, right? And so like you lose all the capabilities of attracting real builders, real community, real users. And interestingly enough, if you know a certain project is doing these type of things and you look at the projects that they're attracting, you know that these projects are like just after certain quick wins. But anyways, so that's kind of like how the problems start originating, and they find themselves in situations where they can't get outside of it. And they have to keep feeding these bots in order to keep their metrics. And one way that we discover it in the research is that we start following kind of like correlation and causation. We wanted to really understand what is tweaking completion. So we started from the first metric, which is completion. What is making completion up? What is making completion down? And then we start like tracing it. You as you said, Josh, like there's difficulty, and we get inspired from like all the psychological research about like how do you create new behaviors. And difficulty is like one of the first thing. Like if you want to create a new behavior, you need to make it as easy as possible. And so we measured this, and then we kept going. And the highest correlation, the biggest surprise, was cost. So if you really want to pick one metric that tells you like what's going to happen to completion, it's cost. And the moment you realize this, you're going to be surprised. Like you're going to be, okay, so what's happening behind the scene? And this is where you start realizing there's some kind of like profit maximization algorithm running, right? If cost is down, it means I'm going to make higher rewards, higher profits. So, and this is where we start realizing that there's a lot of behind the scenes like bot automation going on. And this kind of idea of like Quest became some kind of like MEV type of like scenario. And so to really test those things, well, how do you, one of the things established in like the research outside of crypto is the effect of like thresholds on bots. Like if each wallet needs to have like $10 or like certain value, that's something you can fight bots with, because like bots, they don't have like huge capital, etc. And so we did this test and we realized that the moment we add a threshold, like quest completion dropped by 90%. The moment you remove threshold, quest completion was up for one case like 112%. And so when you see those dynamics, you start realizing, okay, there is actually some kind of like automated way of completing this quest. Then we kept like following it further, and then okay, if what's really happening is profit maximization algorithm, how do you test it? Well, give it actual reward instead of points. Give it an actual reward. And what would happen to completion in this case? So reward is the opposite of cost, right? But both of them are basically the same metric in different ways. Yeah. So this comes here, this chart, which is like, just like crazy chart. So let's say if you take the purple quest, well, epoch 43, epoch 44, it had like somewhere like 3,000, 4,000 completion between those two lines. And then epoch 45, you give it a reward. And the moment you gave it a reward, it jumped to more than 40,000 completion for one epoch. And then the moment you remove the reward again, it dropped all the way and it went back, to like its usual completion. And so this huge spike is kind of what you can imagine it as some kind of dormant wallets sitting there, waiting for something profitable, like the Black Forest analogy, to jump into it and complete it and receive this reward. And this happened across all the different quests that we tried. You see those spikes, you see this kind of like profit maximization. And the one very interesting part of this is that in epoch 46, you look at a red quest that has a star. And by the way, star means that this quest during this epoch has a reward attached to it. And epoch 46, you look like there's a red quest, it has a star on it, but completion didn't increase at all. And the reason why is because this quest specifically had a cost higher than the reward. And this was like the opposite effect, right? We're trying to measure it, and it didn't move at all. And this is kind of like what started making us conclude that actually this bot's profit maximization is happening. And the last piece I'll say to it, and I'll turn it back to you, is that the surprise. What if I told you that the actual reward for this quest was like $0.01 or like one cent, 1 penny, right? And this is the biggest surprise. It's like, why would a human sit in front of their screen trying to complete rewards for like 1 penny? And it goes back to the logic. If you're walking on the street and you saw a penny, you're not gonna, like bend down and collect it. But an automated service that specializes in this is gonna collect it, because if it can collect like 1,000 penny, it makes $1, right? And this is where you start concluding what we saw.
So I think the cardinal sin is one, chasing a vanity metrics. This low float, high FTV, centralized exchange listing continues to be like set of really incentives. But I think that the meta here is just like the blind copying of supposed insights without truly understanding the insight. And in our previous conversation, I really liked the example you gave with Duolingo, which I think is brought up time and time again. I have been guilty of this as well, which is sort of, seeing the value of a very well implemented points/leaderboard program and maybe failing to recognize all the insights that actually went into it. Can you maybe talk to that example and maybe lead that into what we might be able to do better here?
Yeah, of course. So one of the things part of the research, like talking with teams. So there was this team and they were like building their own like point gamification system. And they also shared this analogy of yours, like Duolingo. Like Duolingo was dying. They did this gamification. They became one of the most used apps ever. And one of the things I never thought like I should really say is that if your product is bad, nothing is gonna fix it. And like for certain teams, they thought it's a magic fix, but it's not actually. And so that's kind of like the first thing. First, like you really need something good, and then gamification could work. The second mistake that I saw constantly happening is that these type of like gamification, points, loyalty programs, whatever you want to call them, was kind of like a second order effect. Like imagine you're building a product and they thought about it as a feature within this product. And usually they are run by, I don't know, like BD, marketing, whoever is responsible for growth. And they, like, okay, let's put this, let's make it work. But it's no surprise that it doesn't work, because the product itself and your objective is not really tied to these kind of like gamification elements. And so, like, for example, when you look at Duolingo, the reason why Duolingo worked extremely well is there's the gamification is the product, and the product is the gamification. You know, it's not like separate. They're like basically both the same thing. And it's built on this kind of like a theory of behavior. When you want to create a new behavior, well, a new behavior equal motivation times ability times triggers, right? And one of the biggest problem in like creating new behaviors is the motivation part. And by the way, like this Daniel Kahneman, like he talked once about like 50 groups trying to motivate people to go to the gym, and they all failed because motivation is like really, really big part of it. And so Duolingo realized if they make it as easy as possible for you to join and to learn, like they reduce the motivation required, they could start building this type of behavior. And that's like the gamification element around it, where you see it in the product. A lesson is like 1 minute long, you know. But imagine now, like the tier of gamification wanted to make it as easy on you as possible, but each lesson is 1 hour long. They don't fit together. It wouldn't have worked. And so the first problem you see here is that people are just bringing gamification, sticking it on the product, and say, you know, like we have a progress bar, we have a leaderboard points. It's not going to work. So one of the solution, how you should think about it, and this is kind of also inspired by, you know, like games, is that in games, there's always this kind of like arc, like narrative that, you know, like the game is building towards like beginning end. And one example is kind of like World of Warcraft, where, you know, like you start as a player, as a hero, you don't know anything. And then like towards the end, you want to be the master of your world, you want to roam the world, you want to go slay monsters, play with like raids, groups, like PvP, 40 versus 40 players, right? Now imagine you directly start at level 80 and you have like 30 or 40 different spells. Like, what the hell is the user going to do? You know, like it's impossible to learn which spell do I use, how do I play? They're going to get overwhelmed. It's not going to work. And so what gaming realized is like, okay, how can we build this kind of like hero's journey, right? And the gamification element is basically a tool to support the player to go from like being a noob, like a beginner, all the way to become like a master, right? And so this is where kind of like the leveling system came in, where each level is a reflection of a skill that you mastered, is a reflection of something that you learned. And the moment you prove that you learned this or you mastered it, you move towards the next level. And it's based on this kind of like gradient progress theory, the goal gradient effect, which is they tell you like humans have hard difficulty, you know, completing something if the goal is very far and like, you know, like hard to accomplish. But if you break for humans a bigger goal into smaller goals that is always like in reach, like they could always feel like they could, you know, get it, they're going to be more motivated. And so this is where level system come in, and then XP and points comes in as a feedback to tell you where you are at in your journey towards like this level. And so games figured this out and figure out a way to create this kind of like gamification as a tool to support the player or the human on their journey. But the problem here, what we're seeing is people are using gamification because they want to increase their own metrics, right? And the idea is that gamification is not about you. It's not about your metrics. It's not about increasing what you think it's important. You have to reverse the thinking. You have to think about what is the mission that this user is on when they come to use my product, my app, and how can gamification help them on their journey to become the hero or like to support them towards achieving the goal. And this is, you know, like the reverse of,
Yeah.
So I wonder if you make that, how do you land that for like a crypto project? Like, so make that a little bit more concrete, whether it's for a DEX or another blockchain. How do you see that being more effectively used?
Yeah, so, and this is theoretical, we haven't tested this. And so for example, for a DEX, you can start asking like the first question, okay, what is this user journey when they come to this desk? Okay, what is their goal? What is their mission? What do they want to do? And let's say for a DEX, you know, like this person want to come because their ultimate goal is they want to make more money. They want to make profitable trades, right? They want to get to a point where they make profitable trades, profitable decisions. And then you can start like breaking this up into, you know, like different elements and you know, like the hero's journey. And you should think about, okay, what is this? I want to help this user become rich, or I want to help this user doing profitable quests. And what is, if we start all the way from the beginning, what is the stuff that this user has to learn in order to get to the space where they're making these profitable quests? And then you divide the gamification into stuff to support them. So you can imagine like step number one, you want to teach your users to deposit money into this DEX. So that's kind of like level one. Level two, you want them to like exchange whatever deposited into another token. That's like step number two. Step number 3, maybe you want to create like a gamified, like if they could read the chart, etc. And then all the way, this is kind of like how you start like supporting them to build the required knowledge and understanding of how your product is helping them achieve their mission, right? And then along the way, if you want to do rewards, the reason why when you do it like this, rewards, the number one problem with rewards currently is they're not meaningful. They're reinforcing a transactional behavior. Users know that I'm doing this and I'm receiving a reward for completing this quest. And this theory of like Taylor in the 1980s, like it says in psychology, it triggers the mental accounting theory. So users now, they start thinking about how they're receiving their money as, like as job. I'm completing this quest, I'm receiving this money. And this is kind of like one of the core problems. So rewards, what they come as now in part of this hero journey perspective, they become more meaningful because you are rewarding them achieving something new. Like you are rewarding them like in their mastery journey, in their hero journey, and you can tie this type of like rewards to specific milestone. So rewards now become meaningful, and the rewards should be a tool that pushes them to the next level. Maybe, like you're doing gas rebate in order for them to keep transacting. It shouldn't, feel like I did this quest and I received this reward.
Man, I think there's like a lot more to get into here, but we're kind of coming up on time. So I know you're probably going to be getting a lot of attention around this. You're going to Asia to present this. So if any of our friends are in Japan, maybe have a look out for Joseph there. I think we're going to see more and more of these sort of vanity metric games still be played. But I think we're also in this middle ground here where more and more folks are realizing just how, if you want to go build a real business, an institution, something's going to sustain, how value destructive a lot of like the copy paste strategies that have been almost forced upon us, or at least deeply incentivized. I mean, early investors and founders are deeply incentivized to do a low float, high FDV token that is mostly bots, and people are still making a ton of money off of that. And so I don't know what the actual shift is that makes that no longer valuable. Are we there already? I don't know. My guess is it's sort of, Hyperliquid is more of like the example here that leads the way rather than maybe the anomaly as we move forward. But yeah, I love this. It should be a sober look at points and quests in many ways. The research here is shared on Joseph's Twitter, which I've tweeted about, and we have up on our C Club account as well. So make sure you go give them a follow. And yeah, hopefully, as you move into, I assume people asking you for the solutions here, my guess is you're going to be working more on the solutions. Would love for you to keep us up to date, because I think this, it's all about incentives, baby, and they ain't right now.
Yeah. It's like the amount of teams, that reached out after the paper was like, I honestly didn't think this problem is as big, and so many teams are like facing this problem. And that really motivated me like to kind of work on the solution. And that's currently what I'm doing. And yeah, I'll keep sharing with you. It's definitely something not very, like well, let's say worked at or looked at in our space. And yeah, happy to be pushing this as far as possible.
Awesome, man. Thanks for hanging out with us today, and best of luck.
Yeah, thank you guys for having me.
Peace, dude.
That's good. Bye.
Are we in the sober reality era of crypto?
Oh my God.
I mean, it's funny because like I think so many of these teams, I mean, obviously some, are just trying to make a quick buck, but a lot of like the properly intentioned teams, they just raise a bunch of money and then suddenly they're like on this treadmill that they can't get off, right? And then next thing you know, you're launching a high float, low FDV. You're trying to, you need to run these marketing campaigns. You need to attract TVL before launch. You need to do all this stuff. Or, I mean, your investors are pushing you to do it. Hard conversations to have if you want to go a different route. Yeah. So you need to, I think you need the right intentions from the get-go and design everything accordingly.
One of the things in this bucket that is kind of interesting to me is I think CoinBoost or Boost has been used to there's atomic quests that you can sort of incentivize certain actions. Been used to incentivize people to going and buying bubble tea at a San Francisco bubble tea store. And I think Kaito, who's at Base, basically said, "All right, I'm going to pay for 50% of your bubble tea here. If you just go do the transaction with USDC on Base, we're going to give you a rebate on it." And it felt like this idea of incentivized transactions in the real world with a real tangible product felt very interesting to me. And so I think, and also I do think there's a game to play here for bots in some way, right? There are going to be more bot users. I don't think the bots that are purely trying to extract value from it are the right type of bot user. So there's probably good bots and bad bots, but it is interesting to think about how do you, like, what is the competitive landscape there if you are actually trying to attract bots? And I think Brian Flynn, founder of Boost, is basically saying, like, you're going to get paid for your actions or for your purchases and for your transactions. And it seems like that is the way that you go build some sort of affinity with bots, is you're just purely economically incentivizing them to come and use your chain.
For sure.
Big question on whether that is sort of like an enduring moat that you can go build there or not. But it's very much not coming from the point of view of, like, I need to have X number of users on my account so Binance likes me.
I mean, it's if they're doing like a value additive thing on your chain, right? Like probably a ton of like LP providers on Meteora or whatever are probably bots. But like it's like a core functioning of this chain, and you should obviously create the environment in a way that makes it very easy for these bots to come and participate, versus the like obviously just short-lived kind of mercenary bot usage of, come do this, we're trying to pump our active address numbers, we're going to launch an airdrop, it's going to be down lonely, the economics are no longer going to make sense for you, and you're going to leave.
I think there's no, I won't say that. There are some very, very obvious projects out there that are doing it, and I think even in this open social space, it might even be called that. I don't know.
I just have to say, this is the first time I've looked at this, and it's a total joy. It's such awesome work, and I love that he omitted any research that he just didn't put together in an actual academic way. This is just like a genuine gift for people in crypto. This is like real work that a lot of people don't want to do. And
it was pretty refreshing to read. I agree.
It's very nice to be able to, read through this.
It's also awesome. So funny how like the chain commissioned this work and then read the research, and they were like, "You're not putting our name on that.
You're fired."
That's funny. That's hilarious. Not what they wanted to hear. Well,
not what they wanted to hear.
Well, it's because you sort of boxed yourself into a corner
right?
It's like you kind of have to. That's the game you've been playing, and it's the emperor has no clothes.
That's awesome.
Yeah, I don't know. Oh, all right. I mean, was there anything else? Actually, I'd love to just leave people with an aspirational, maybe lightning round here, which I would say is from one of my favorite writers, at least when I was sort of coming up and trying to make sense of the world, Derek Sivers. And do you have that link piece?
I don't know.
You do. It was I think it was Jess's last topic, maybe.
It's my last topic. Yeah, I'm trying to find where it went here. Empty the clip.
Oh yeah.
Empty the. Oh, look, you're seeing the behind the scenes
database
that drives the Internet Explorers. So Derek Sivers, he I think founded CD Baby back in the day, and then really it's just, I would say, more of like a entrepreneur, internet philosopher these days. And I think it's thought deeply about what it is to lead creative work. And I think it's, doubly important today. So here's how to create. The most valuable real estate in the world is the graveyard. There lie a million of half-written books, ideas never launched, and talents never developed. Most people die with everything still inside them. The way to live is to create, die empty, get every idea out of your head and into reality. And it just feels like the right message for this world where we have the means of production to do far more things today. And really the barrier is the courage or the willingness to be cringe or just the willingness to start. He finishes here with, which would you rather be? Someone who hasn't created anything in years because you're so busy consuming, or someone who hasn't consumed anything in years because you're so busy creating?
It's motivating me to go post on LinkedIn.
Dude, I love it, man. This is the message. It's awesome.
Dude, if you go post on LinkedIn,
will you like it?
I don't.
Are we even connected?
I don't think we're even connected. Holy shit, we're not. That is incredible.
There's no way we are. I don't think either of us.
It's like the weirdest thing.
Yeah.
I jump into I live in a small town, so I joined Facebook for Marketplace, rejoined Facebook for Marketplace and for just like our local community groups, which are insane and purely entertaining. But I keep seeing a bunch of my crypto friends show up there in recommended friends, and I'm like,
no,
wrong, bro.
No.
This is not this is not where we're doing this, So it's kind of funny. All right, we have some content coming out that Cheryl and LDF have been created about the Crypto the Game that is doing really well on the internet. And also a post here from a Liquid Culture episode. So there's a whole bunch of stuff diving into sort of the creative side of crypto and also like the wild reality TV show style that two women experienced as they tried to go dominate and win Crypto the Game. So some great stuff there. Of course, we also have our lovely weekly newsletter that every single time gets sent out. I get DMs about these titles. So I think that speaks to the insanity of the lovely human being running them and the joys of her brain. So make sure you're giving that a follow. Anything else I got to say here? What else is going? I think, are we dying empty here?
We survived another week.
Looks like it. Go
Looks
us.
like it. Looks like it.
Higher lows, baby. Onward.
I know. I did have a good chat with Chris Berneski yesterday, who's like my macro soothsayer. Give me some really great hopium, right? Low's not as bad. Bitcoin gaining against the NASDAQ, holding up strong today. I think we might be okay. Don't sell it all just yet. Awesome. Well, we're back again Fridays, 10 a.m. Pacific, 1 p.m. Eastern for Internet Explorers. We're going to keep shifting up the format here a little bit. Feels good, man. Dust off the cobwebs.
I like the faster pace.
I like it too. All right. Well, good luck over the weekend, y'all. Let's see where crypto goes. And until next week, we'll see you on chain.
See you there.